Coinbase is down 3.1% today, closing at $189.44. That's a $25 drop from last week's highs above $214. And Bloomberg just reported the reason. Bitcoin hit a 2-week low overnight as crypto liquidations topped $800 million in a single 24-hour window. When leveraged crypto positions unwind that fast, Coinbase gets caught in the blast radius. It always does. But here's the thing. 11 days ago, Coinbase filed its Q1 2026 10-Q with the SEC. The numbers inside that filing don't look like a company in trouble. Today we're going to separate what the tape is saying from what the business is actually doing, because right now they are telling very different stories. Let's establish the timeline. On May 5th, Coinbase filed an 8-K disclosing a material item under Section 2.05 that covers departures of directors or principal officers or compensatory arrangements. 3 days later, on May 7th, they filed both the full Q1 2026 10-Q and a simultaneous 8-K covering items 2.02 and 9.01. That's results of operations in the financial statements themselves. This is a company that filed on schedule with no restatements, no auditor flags, and no guidance withdrawals. Then between May 8th and May 12th, 5 separate analyst firms, J.P. Morgan, H.C. Wainwright, Piper Sandler, Baird, and Mizuho, all reaffirmed their existing ratings. J.P. Morgan held overweight. Not a single one downgraded. When 5 firms look at the same earnings report and none of them flinch, that's a data point worth noting. Here's the structural dynamic that explains today's move better than any Coinbase-specific story. Coinbase has historically traded with extremely high correlation to Bitcoin's price. Not because Coinbase's revenue moves dollar for dollar with Bitcoin, but because retail and institutional investors treat it as a leverage proxy for crypto sentiment. When Bitcoin drops hard and fast, margin calls cascade, liquidations spike. That $800 million figure from Bloomberg is the mechanism, and anything crypto adjacent sells off in sympathy. Today, Bitcoin is sitting at $76,729. The VIX is at $17.82, which is elevated but not panic territory. The broader market, SPY at $738.65, Triple Q at $705.88, is under mild pressure from rising bond yields, per bar charts reporting. So this is a risk-off day with a crypto-specific accelerant. That's a macro story, not a Coinbase story. Now let's get into what the Q1 2026 10-Q actually tells us. And this is where the story gets more interesting. Coinbase has been deliberately building out its subscription and services revenue line precisely to reduce its dependence on transaction fees, which swing violently with crypto volumes. Transaction revenue is still the largest piece of the business. That's been true for years, but the subscription and services segment includes stablecoin revenue, staking, Coinbase One memberships, and custody fees from institutional clients. This mix matters because subscription and services revenue doesn't evaporate when Bitcoin drops 5% in a day. It accrues on balances and user counts, not on trading frenzies. The strategic bet Coinbase has been making is that the institutional custody and stablecoin businesses can provide a floor under revenue even in down volume environments. The institutional side of the business is the angle that's genuinely new since the prior video on this name. Bitcoin spot ETFs have been trading since January 2024. That's roughly 28 months of live market history now. Ethereum spot ETFs launched in July 2024. Coinbase is the custodian for several of the largest spot Bitcoin ETF products in the US market. That's a fee-generating relationship that doesn't require retail investors to open Coinbase accounts or trade on the platform. It generates custody revenue on assets under management, regardless of whether those ETF investors are buying or selling on any given day. The 8-K filed May 5th covered a compensation or officer-level arrangement. Not a client departure, not a custody contract termination. The institutional custody engine appears intact based on the public record. One of the more important things to track in any platform business is operating leverage. What happens to margins as revenue scales? After the brutal 2022 contraction, Coinbase cut headcount aggressively and rebuilt its cost structure. The question the Q1 2026 10-Q answers is whether that restructuring actually produced durable leverage or just deferred costs. Based on the fact that 5 analyst firms, including JP Morgan at overweight, came out of the filing without cutting estimates or flagging margin deterioration, the read-through is that the cost structure held. Operating leverage in financial platforms tends to be sticky. Once you've right-sized the team and the technology infrastructure, incremental revenue doesn't require proportional incremental spending. That's the thesis the institutional bulls are holding on to, even on a day like today. Now, the honest caveat, because this channel doesn't do cheerleading, 3 risks are sitting directly in front of this stock. First, Bitcoin is at $76,729 today. If that number keeps falling, Coinbase transaction volumes compress and the revenue mix shifts unfavorably, regardless of the subscription floor. Second, the May 5 8K covering item 2.05, the officer-level matter, is not fully explained in the public record yet. Compensation arrangements can be routine, or they can signal management instability. Watch for any follow-up disclosures. Third, Coinbase's regulatory environment has improved materially since 2022 and 2023, but it's not static. Any reversal in the current policy posture toward crypto could reprice the entire sector quickly. These aren't reasons to dismiss the fundamentals, but they're the variables that could make the fundamentals irrelevant in the short run. So here's the read. Coinbase is down 3.1% to $189.44 today because Bitcoin fell to a 2-week low and $800 million in crypto liquidations cascaded through the market overnight. That's the tape. But the 10Q filed May 7 shows a business with a more diversified revenue base than it had 2 years ago, an institutional custody franchise tied to ETF products that have been live for over 2 years, and a cost structure that 5 analyst firms looked at without flinching. The stock's volatility is currently tracking macro crypto sentiment, not specific deterioration in Coinbase's operating metrics. The gap between where the stock is trading and what the filing shows is the story today. Whether that gap closes up or closes down depends almost entirely on what Bitcoin does next.